And we should be off to the races. Awesome. Well, for those of you had a class yesterday where we were talking about this non-farm payroll report here this morning, and essentially what it all boiled down to was my thought process being that if non-farm payrolls came out above expectations, we might actually see the dollar fall. And if it came out below expectations, that there was a chance we might see the dollar go up. And people were kind of questioning that as far as the logic behind it, because it's usually the inverse of that. Usually good non-farm payroll will equal out to a stronger dollar. Bad non-farm payroll will usually be a weaker dollar. And we did have a negative non-farm payroll report this morning at a plus 151, 38 below expectations. They revised the previous number down by about 30K. Also, unemployment rate did slip down, but this was the bigger number here this morning. And the first question that's going to come up probably in your mind is going to be, well, why did the dollar get stronger? And when you look at how the dollar's performed all week, kind of overall here, you can kind of clearly see that the dollar has been getting weaker. You know, it's just now getting stronger and breaking out to the downside versus a lot of these currency pairs, but overall the dollar's been weak this week. And one of the reasons for that is because of the fact that the markets, the dollar's been trading risk on to the markets, meaning when the stocks have been up, dollar's been up, stocks go down, dollar goes down. And with all these breakouts that we're seeing right now, it's because the non-farm payroll, even though it came out below expectations, it actually lowers the probability of the Fed. In my mind, this is kind of my theory on why the dollar is getting stronger here this morning, because with the Fed poised to potentially raise rates, the market doesn't like the idea of the Fed raising rates further. So this lowers the probability of them raising rates sooner rather than later, which obviously the stock market likes, because the futures were down substantially, and now the futures they were down like 90 at one point, and now the futures are only down like 42. So the markets are starting to climb their way back here. So we didn't trade non-farm payroll this morning. One of the reasons why was because we wanted to wait until after the Fed came out with their decision and to see how the dollar would react. There is one trade. There are several trades that I'm looking at here this morning. One of which being right here on the dollar yen. I actually took a short trade yesterday on the dollar yen. I went short when it broke through the 117 level. I put a stop 50 pips away. Came down almost to a take profit level. It got within 2 or 3 pips of a take profit, and I was trailing my stop down with a 3-bar reversal. I ended up getting out for about 3 or 4 pips of gain there. But I do like the fact that the yen is now breaking out of this consolidation that it had overnight. If you kind of look up here, you can see that, you know, the yen really was consolidated, and it's starting to break up above the 117 level right in through here. I think with dollar yen, this is one that we can really look to have some type of retracement here today. Yesterday we were actually looking to trade dollar yen in either direction, and so this I already traded it to the short side for very limited gain, and then looking to trade it to the upside here this morning. It's already hit to a +5. It got to like a positive, I forget where it was like positive 5.01 at one point in this breakout above 117. So start off here with a trade here on the yen. Let's see here. I like the level it's at. I like the fact that it's been steadily climbing here, even before the non-farm payroll was climbing to the upside. So I'm going to go ahead and start class off by doing a 1-lotter on dollar yen. And I'm going to put this as a stop loss. I'm going to put this at 117.851. I'm sorry, 116.851. And put my limit at 117.851, so 50 pips away. To see if we can't get some type of upward swing here. I had the feeling yesterday that the markets might increase even if we had a negative non-farm payroll today. So I'm looking for kind of more of those higher yielding assets to make a further rise to the upside. So that's the trade that I have in now. Now the stop is pretty tight because we've had some abnormal volatility. But as this increases, I'll probably also trail this up with a +5 on the 1 hour totals above the 117 level. Tom, I just saw your comment on there about no email. I thought I pressed send on that there about an hour before class started. I'll have to go back and check, but yeah, I thought I usually send one every time, so I apologize if you didn't receive a reminder. I'll have to check into that. So stop is 50 max. You can see all of this with the dollar. Dollar initially went down with the negative payroll number. Now it's coming back to the upside. So we're going to give this one a shot. So stop of 50 max. And then since it is a Friday, we're going to go with a limit of 1-to-1 risk reward. The market opens, the stocks here in the US, if they open, they start heading positive. I think we can see some upside momentum here this morning. But we also want to prepare ourselves to go the other direction, so we'll get into that also. Looks like I have the wrong PitView thing up on here. Feb 5th. And oil has rebounded just a little bit. It was down quite a bit. It's up like 1% today, so that could also be another positive indicator for the market since we're so oil centric right now. Key news: non-farm payroll was plus 151. Let's go to Forex Factory. It's plus 151 versus 189. And the thought process off this key news is and that is our reasoning here. That's our story anyway. That's our story, and we're sticking to it. So we got that, and I think I haven't put this in. So this will be considered a risk-on trade. dollar yen. And this was taken during class. And we're good to go. Switching gears here, I'm going to switch over to, let's go to euro dollar real quick. There we go. You see, as we kind of went in through this NFP report, if you will, euro is one that I think we could also look to trade kind of as a risk, as a risk off trade, if you will, meaning if the markets go negative. I saw these two candles coming down, but the euro has been still heavily bought, still at a +6. So it's kind of been making a divergence since the non-farm payroll report, even though it's come down further. It's still low. Liquidity providers are still favoring the buy side of the equation. The one level I was looking at here, because it already kind of went up and hit, was this. It had a really hard time making a sustained break above this 112 level right in through here. So this 112 level, I think, could act as a key level here on euro dollar. And essentially all I'm going to do is if this dollar yen hits for 50 pips, I'll be done. I'm done. I'm done for the day. I'm willing to take that 50 pips and I'll ride that into the weekend, which I think would put me like in a positive like 10 or 15 pips for the week after suffering some minor losses and some break-even trades. So it hasn't been a horrible week, but just slightly down. So I thought since we're already looking at a long on dollar yen, that if the markets do start coming to the downside here today, they'll probably, if the markets do continue their downward spiral today, meaning if we get a large sell-off, I think that there's no doubt the dollar is going to sell off across the board versus every currency. So you can almost pick one: dollar yen, dollar Swiss, pound dollar, euro dollar. You can almost pick any one of those and be good to go with dollar weakness. I just saw how if there's this much volatility to the downside with the futures kind of recovering a bit since non-farm payroll report came out, then I think if it reverses course and comes above this 112 level, I think it could make an even stronger volatile move to the upside. So essentially what that means is if the market opens up and starts coming back down and makes a sharper move lower, we're probably going to get stopped out on dollar yen. That's just the way the market's been working as of late. And if you wanted to kind of switch and reverse positions, you'd have to kind of go in and be quick on the trigger to look for other opportunities. So my buy entry, I was just going to look at this key level that it was just kind of hovering around for the last 24 hours, +5 on the 1 hour totals above the 112 level. Because it just seems like there's a lot of buying pressure on euro dollar. It could continue going down just because, on PitView, just because something is showing like a divergence like this, it could also be, quite a bit of people covering, if you will, positions, since it has made a downturn here. So that if this divergence continues and it starts coming back up, I think that would even be a better indication that people want to continue selling dollars off if the markets go down. I'll show you a little bit more of what I mean here in just a second. Put a max of a 50 stop, and then a limit of 1-to-1 risk reward. somebody may ask, why aren't we shorting euro dollar? We're already long dollar yen, so we're already long the dollar. We're already in a long dollar position. If we double down into short euro dollar, we'd be doubled up on a long dollar position, and essentially we'd be leveraged into basically two lots on the same trade that's going to go in the same direction based on what the market does. And this will probably be, this will be dollar weakness. This will be kind of our risk off scenario. And that's plenty of focus for a Friday. Just two trades. One of them's already on. So that's our bullish play if markets go down. And here, let me just take you to the dollar to kind of explain the thought process here a little bit more. Pull up all these dollar pairs on the screen real quick. I showed you these a little bit earlier, but just to kind of explain the thought process here. Last week, and even at the beginning of this week, we were trading into like CAD yen. We were trading that whole risk on, risk off deal on like CAD yen, because up until now, the yen has been one of the big drivers of what we call risk off, meaning when the markets have sold off, the yen has been getting stronger, so the dollar yen has been going down. But if you take this non-farm payroll and kind of the consolidation overnight out of play here on the right-hand side of these charts, what's been driving the market this week is, if you look here on euro dollar, dollar's been weak versus the euro, dollar's been weak versus the pound, it's been weak versus the Swiss, weak versus the yen, it's been weak versus Canadian, weak versus New Zealand, and weak versus Aussie. So versus all these major pairs, the dollar's been weak. What's been happening this week, if you will? Well, markets have been getting spanked. The markets have been, even every time it looks like the markets are going to go up, we get another big sell-off, which has led into more and more dollar weakness. To whereas the week before, and one of the reasons why we were trading all the yen crosses, like the commodity crosses with the yen, and for the several weeks before that, is because that's kind of switched. The way, what's been leading the risk on, risk off charge up until this week has been the yen. Meaning the yen, when you pulled up all the charts on the yen up until this week, the yen was the one that was kind of driving everything. All the yen charts looked exactly the same like all these dollar charts do right now. But that hasn't been the case this week. Now the dollar's been kind of the one that when the markets go up, the dollar gets stronger. When the markets go down, the dollar gets weaker. So the dollar's been kind of leading the charge there of what we call risk aversion or risk appetite and risk aversion. It's one thing about trading currencies is they always keep you on your toes, and it's always extremely interesting because there's been people that have been my students for some people have been my students for like 10, 12 years, and all of them say the same thing, that the market conditions are constantly changing. What drives the market, what drives the attention of the market, what drives overall strength and weakness in the market is constantly changing. So it keeps you on your toes. But at the same time, if you learn what's driving the markets, if you learn things like, the whole risk on, risk off scenario, you start to see patterns develop. Like when, like this is like 2008 right in through here, because the dollar did the same thing in 2008, only the dollar would get stronger as markets would sell off. So you start to see things like, oh, well, I know what the dollar's doing right now. It's trading risk on, risk off. And just knowing kind of why things are moving is, as G.I. Joe would say, knowing is half the battle, or whatever he would say. Just knowing why some of these things are moving in the directions that they are. Like, I can guarantee that there's a lot of technical Forex traders probably looking at these movements on the dollar this morning going, well, this doesn't make sense. Non-farm payroll was negative, but the dollar's getting stronger. Well, non-farm payroll, just like we said at the beginning of class, I don't think everybody was in class here right at the beginning, but non-farm payrolls were negative. However, the stock market right now is does not want the Feds to raise rates. So anything that lowers the probability of the Fed raising rates, which a lower non-farm payroll number does that, it lowers the probability of the Fed raising rates sooner rather than later, then the stock market is taking that as a positive. And since stocks are the things driving the dollar this week, even though the non-farm payroll was negative, and you did see a brief little drop off in the dollar, the dollar's recovered because stocks have recovered. Stock futures are a lot of stock traders, I guarantee, are sitting there looking at the non-farm payroll report going, oh, good. Well, Yellen and company, this pretty much assures us probably that we won't have a rate hike in March, which stocks tend to really like that idea of them not raising rates. So that could be contributing to more of the bullishness here this morning in the futures. The thing that's scary about going into a risk-on trade and looking to trade the market to the upside is the fact that we are in, since the beginning of the year, you could call this, you wouldn't call it a long-term bear market, but we certainly have been in a short-term bear market since the beginning of the year. So the only scary thing is kind of fighting that trend of being a bear. What we're doing here is we're really just looking for the market here at the end of the week to perhaps make a dead cat bounce and at least make a lower high in this little downtrend that it's had since the beginning of the year. But we shall see. So, since it is Friday, I wouldn't over trade. I would go with the same strategy we had yesterday. And since it's Friday, I would go ahead and trail your stops using a 3-bar reversal right upon your entry. So all that means is that, if you're trading something like here on the dollar yen, like if you have a working candle, you would count back 1, 2, 3 candles and place your stop at the low of the previous 3 candles on the chart. And then as every hour passes during the day, since we're swing trading, as every hour passes, you would start the count again. Like if this was the working candle, you would count back 1, 2, 3. Place your stop. Well, actually, this would have been stopped out right in through here because this tail would have gone through the stop. But just constantly trail it up as the markets go up. So volatile non-farm payroll report. We'll see if the markets can like it. Should get the markets opening here in about 3 minutes. We should be good to go. So I'm just looking at just those 2 trades for right now. One other thing I wanted to go through real quick. I'm going to change this template back over to a basic template, as I had some questions on how to add the indicators to PitView to set them up the way we have them in class. And I'm talking about the indicators that we pull up oftentimes on the MetaTrader. I'm going to walk you through that real quick. If I go in here under View and then go into Navigator, Once you download PitView, under your expert advisors, under the navigator, you'll see your PitView trading EA, and that's what will load all the indicators onto your chart. If I click and drag that PitView trading over to the screen, you want to make sure that these are both checked to allow DLL imports, allow import of external experts, allow live trading, enable alerts. You want to make sure all these boxes are checked. Click on OK, and that'll put the little smiley face EA on the top right hand corner of your screen. So that just means the PitView data is now can now load into your chart. And then when you download PitView, also it'll automatically load in your the PitView indicators into your indicator list. And so to add, let's say I want to add the LP trend line, I would go to Insert Indicators, go under Custom. Here's the PitView Liquidity Provider trend line. I usually set mine to totals because that's what I prefer to look at, is the total buy and sell in balance between market makers. On the LP trend line, that's really all you need to do, is just change that to totals. Click on OK, and that'll put the LP trend line on there. And then for the actual PitView indicator itself, the one that tracks these pair view, right up in here, if you go to Insert Indicators and under Custom, go to PitView Indicator. Under the inputs for the indicator, I usually put mine at hours. And if you know, been watching class, you know we look at the 1 hour totals. So hours, 1, and totals is what I change here. You can also customize your levels. Like, you know how we look at the +5s and -5s. If you go into add, you can put in 5 and then add again, and you can go -5. And then you can also put like the 0 level just to see the in-between point. I usually have the color as like navy blue. Click on OK. That should pull up the indicator. So that's how you get both of those pulled up on your chart. Once you get all this saved, by the way, what you want to do is you can go in and save it as a template. Like I have the 1 hour, I have the trend line where I want it, the LP trend line. I have the actual PitView indicator. If you right click anywhere on the chart and go to Save Template, like I saved this one as the PitView method. Like you can see, I see that, and you can save that as a template, so that if you ever want to switch between charts and go to different types of charting styles, all you got to do is right click on your chart at any time, and you can go to Template and just left click, and all those will be saved as far as your those inputs go. So that's how you get the indicators on the chart. Stocks are opening for trading right now, and they are going negative, which is a bummer. S&P's down 6, NASDAQ's down 20. It's actually not too bad. What you'll have to do this first half hour of trading is just kind of wait it out. Like the Dow's only down like 23 points right now. Kind of go here to the open. Of course, oil's still up. But we do have scenarios for either direction. We have a scenario for being long the market, so we're long dollar yen right now. And we also have a strategy for going short the market, which on the euro dollar, that would take a larger sell-off there. So I mean, the euro dollar, the market would have to tumble quite a bit in my IMHO, in my opinion, in order for that euro dollar to execute. So that one's a good one to kind of keep on the side burner there, because you can see all this volatility in through here. So you'll just have to let the market go through all its openings and see if this market stays true. And what I mean by the market staying true is the market staying true to where it's to coming back to the upside. May not occur, but I am very much bearish on the market. Don't get me wrong. I'm always a natural bear because the market slides down the steps a lot faster than it goes up them. But I speculated on this yesterday, thinking stocks would like a negative non-farm payroll number, and since that's what's happened, that's how I'm trading it. You know, looking at some of these other pairs, like the euro dollar, we're looking for it to break through the 112 level. You know, when I said you can pick pretty much any pair, like dollar Swiss, you could look at like the 9900 level, which is where it found support right in through here as a sell entry. That would be the same as going long the euro dollar above 112. Pound dollar, same thing. Pound dollar, which has come down quite a bit. I actually opened this one up this morning and ended up taking this off right before non-farm payroll for a small loss. But non-farm, pound also is one that you can still look to buy, if you will. If it crosses back above, you could even look at this one at the 4,500 level. If it goes to like a +5 above the 4,500 level. So all you want to do to trade the market to the opposite end is just look at those key levels and trade them accordingly based on, you know, if it stays above, like on the dollar yen, you know, we want it to stay above that 117 level, which it's not doing right now, but we're not done yet on it, mainly because the Dow went down. Dow opened down like 20 points. Now it's down 60. So that's bringing the yen down a little bit. It's bringing all of these down. You can see it it's making the same candlestick on all these. That should be showing you that the dollar's in fact driving the market, because all these recent candles, they all look the same. So we're at the mercy of, you know, right now we're at the mercy of risk on and risk off on this trade. So we're at the mercy of, we're in a risk on trade, and our mercy and our risk here, we know exactly what it is it's risk off. It's if the market starts selling off. That's exactly what our risk is. The markets can make some kind of short-term recovery. We'll probably see a pretty volatile bounce in dollar strength, meaning because the dollar sold off so much this week, we'll probably see the dollar get pretty strong, which is why I put that trade on the dollar yen. If you do happen to place two positions today, let's say dollar yen gets stopped out, and let's say you go long on pound dollar or long euro dollar, or turn around and go short on like the dollar Swiss. You get stopped out twice for 50, because it is volatile. You know, 50 pip max stop. If you get stopped out once and then bam twice, I got an email on this from a student. Please don't try to put in another position. If the market whipsaws you twice in a row in a given day, that's where you really have to have the power to walk away. It's kind of like, you know, like if you're playing blackjack and the dealer keeps on hitting blackjack, you just got to kind of have the power to say, oh, you know what, this dealer's got me, and kind of walk away from the table. You know, part of trading is knowing when to walk away, like the gambler, know when to walk away and know when to run. You know, we do get stopped out in this class. We get stopped out even on good months. We get stopped out 45% of the time. Bad months, in bad weeks, we get stopped out more than that. That's part of trading. Sometimes you get the elevator, sometimes you get the shaft. It's just the way it is. You just got to be able to manage your risk and live to trade another day. So I got an email on that from one of the students. I just want to kind of reiterate that when it comes to risk management and money management, that, you know, you never want to try to seek revenge on the market when it stops you out. Meaning if it stops you out, you don't want to just immediately go in and try to get your money back by taking an opposite position on the market, because all that does is it can lead into, just look at what non-farm payroll did this morning, up then down. I'm sure there were people trading that, buying it when selling it when it went down, looking at dollar weakness, and then trying to buy it back again, and then it's coming back down, those short-term traders. And then you never want to chase the market like that, especially when the market is as volatile as it is. And just take my advice on this when it comes to that type of mentality, because one thing about the market being as volatile as it is, if I get stopped out, let's say on dollar yen, it's not going to, you got to embrace the volatility. What that means is, I know, well, I get a little bummed out if I lose 50 pips, but the thing is that since volatility seems to be here to stay for at least the short term, it's not like I can't look to Monday and say, well, you know what, if I put on there's always Monday. We'll see what happens on Monday, and if I can get a better trade on, I can easily make that 50 pips back. It's not like it was like a year ago in the market where you had to wait, where the market was only ranging like 35 or 40 pips each day. The market moves on a lot of these pairs 100, 150 pips a day. So we can always look to get the money back that we lose. We just got to be patient enough to wait it out. So anyway, that's kind of my soapboxing here for the day. Those are the only two trades I'm going to look for. I'm basically going to look for trading this risk on trade, hoping that the market goes up. And if it does go down, I probably will look to trade potentially to kind of end the week a risk off trade, because we probably could see some volatile movements if the market does start to make a deeper sell-off. And then if neither one of those work, I'll be done. I'll be shutting down my business for the day, and I won't be chasing it around. So let me go ahead and save the trading sheet for the day here. Hopefully I really hope, since most of you come into class quite a bit, that going through the non-farm payroll, that you know why the dollar's getting stronger. We had talked about it yesterday in NuriFX, and then talked about it again here this morning. So I'm really hoping that makes sense to you, because it's kind of an important thing. While most people are saying, why is the dollar getting stronger? You should know exactly why, because like right now, the Dow is starting to recover a little bit off its lows. It was down 60. Now it's only down 27. You should know exactly why this trade is coming back into not down as much right now. You should know why these markets are moving. All right, so let me save this. Keep it tight today. There we go. So there's L trading sheet. Tom, I'm glad you're able to make it in the class, buddy. I haven't checked my email yet, but there is a chance that sometimes I think I click send and I don't. So at least you knew where to go, right? So that's all I got, folks. Be careful. It's never a long goodbye. We'll be reconvening there on Monday morning. Last week there was a different currency driving the market. It was the yen. This week it's been the dollar driving the market. Who knows what's going to happen next week? So it'll be interesting. Forex is never short of drama. So I will see everybody bright and early on Monday morning. Thanks for coming in today, and I'll chat at you later. Bye-bye, everybody.